All right there, everyone. Great to be back with you. We have a wonderful guest with us again today, Colin Plume. Colin is the president of Noble Gold. And if you've been with our channel for some time now, you know Noble Gold has been a good friend to us over the last several months. I know many of you have benefited so much from their services. And Colin is here to help us make sense of some of these extraordinary times that we find ourselves in. Colin has been creating and looking after wealth for his clients and advising on strategy and the management of their assets for many years. And I know a lot of you are responding to these unprecedented times by giving gold and precious metals a second look, especially when it comes to your portfolios and retirement. And so Colin is here to bring clarity in the midst of so much confusion. So Colin, welcome back to the channel. It's great to have you.
Dr. Turley, it's always a pleasure, and yeah, looking forward to talking a little bit about gold, but just investing in general sort of today, and kind of diving into that a little bit more and kind of making it more of a kind of a broad conversation.
Awesome, great. Well, let's begin where we are financially now. You had the jobs report week or so back coming out, 2.5 million. New jobs added, unemployment down from 15% to 13% in a single month. Very good news. USA Today is reporting the Fed is signaling that interest rates will likely stay near zero, at least through 2022. The market seems to have been responding. It's been going up and down a little bit, but it did hit upwards of 27,000 I saw. First time since March. So what's your take on all this? Where are we economically?
Yeah, so the first thing with the jobs report is when you have this pandemic happen, the way the jobs report is set up is obviously part of it is they go to large corporations and they give their report of who they let off or who they're hiring. So that's part of it. The other thing is for people that they don't know how to classify, they send out these surveys and they sort of have to classify themselves. And the Bureau of Labor Statistics said that with this pandemic, it's so much different because there were so many people that were furloughed and they didn't know what to put in the box, right?
Okay.
And so that 13.3% number, they even said they don't think that number is right because everyone that was furloughed sort of put that they were sort of unknown. Whereas someone that's furloughed could absolutely not be coming back to work. And so they said they think the actual true number is higher, but they had to report the 13.3% because that's what people actually checked on the box.
Mm-hmm.
So it's interesting, these statistics, and obviously it's hard to get a baseline when you look at unemployment, when you have it jump so quickly. And then now there's a lot of unknowns about who's going back to work. So they said they think if everybody checked the box right, they think that the percentage would be like closer to 16.3%.
Oh, okay. All right.
Higher. And then you kind of look at the jobs, the big jobs that were reported increase would obviously be hospitality, like, you know, all the service industries. And the only issue with that is that, of course, you know, those jobs jumped dramatically, but a lot of speculation is that those jobs are not permanent, that those jobs are a lot of companies are just testing the waters to see how people react to coming back to restaurants or coming back to hotels. So they obviously had to staff it, and they also have to staff it even more than normal because of all the cleaning that's necessary. So there's a lot of things that are within the numbers that I think that people have to look at. And then, you know, how are companies going to be able to sustain profitability with the new rules that are happening across the nation in terms of the cleanliness and everything that's happening? It's increasing a huge cost, labor costs to all these businesses. And some of them were probably on the brink of struggling before this thing happened. So there's, you know, it's hard to look at the numbers sort of in a straight shot. But I do think there is some positive signs. It does seem like people are getting back out again, and they're starting to, you know, spend money and keep the economy going, which is
they were expecting upwards of 19% unemployment, weren't they? That was
so they overshot basically, and I think, you know, the way the stock in a year when you're going to see incredible volatility, any any kind of positive news, you're going to see the stock market just skyrocket, and then anything negative, you're going to see big. So this is going to be the roller coaster of the stock market that everybody hates. This is like the year that, you know, if you're 3 to 4 years to retirement, you're probably going through a lot of anxiety, and that's unfortunate because I mean, there's really no way to predict what's going to happen except that it's going to be volatile. That's the only thing that you can predict.
Yeah, right. So what? So for retirees, one day they're sitting pretty, you know, look at my portfolio and the gains, and the next day they're calling grandkids, seeing if they have an extra room to spare. So yeah, and they just go back and forth.
Yeah, it really is, and I think that you know, I'm a true believer in jobs. I think jobs drive the economy, and I think that's going to be the sign is if this president can convince people to continue to hire and keep people on, that's going to be really the key to his probably getting reelected and where our economy is going to go. And no one can really predict that because we just don't know what these new costs are, how they're going to affect the bottom line of a business.
Right.
You know, obviously there's a lot of businesses that are staying where people are working remotely, they're telecommuting, they're not going in. So that's going to affect, you know, the real estate and office market substantially because a lot of businesses are just going to say, well, I don't need that office anymore. I'm going to downsize. So there's going to be a lot of that happening. But the big picture, and part of what I wanted to talk today to you about was, where are we right now? What are my options? And I think that one of the things that people call us about is, I have this 401k, I'm no longer employed. What are my options? And I think that it's really important to look at your account, pull the statement, and then decide if you want to keep the 401k where it's at, which is obviously an option. Do I want to move it to a traditional IRA or a Roth IRA? That's also an option. Do I need the money to live on? Which that's another option. Obviously, if you need some of it, and you know, we can just discuss all of that. But let's just go through the first thing, and let's say you need the money, and obviously, no one's going to pull out of their 401k this, they really need it. The way it's set up now is that Congress has passed a law that basically you have 3 years to pay back the tax implication of taking, I think the maximum amount is 100,000. So let's say you needed it for whatever reason, and everyone can look this up and verify it. You can talk to your tax person. From my understanding, let's say you needed 20,000, you pulled it out, you have 3 years to pay back the tax you would owe on that $20,000. So that's obviously a good thing, right? Because normally you would have to pay it. If you took the money out right now, normally you'd have to pay that tax. Either you'd pay it right away or you'd pay it the next year, which if you need the money, maybe you don't have the money to pay it next year. This gives you a little bit more time to pay back that tax. It's sort of a tax loan in a way, because you're not having to pay that obligation. So that's sort of the first thing that Congress did, which I think is a good thing if people need the money. And then, you know, some people probably are going to take that option. Then the other option is, well, I don't need any more of it. What do I do with the rest? So the rest, the question is, do I keep it where it's at? And most things, and this isn't just coming from me, but most people believe it doesn't make sense really to keep it where it's at, because you can't, once you get employed again, you can't contribute to that old plan. So you don't have the ability to contribute there. The other thing is, you know, when you leave a company, is it going to get treated the way that it should? Because you left that place, right? Are they going to treat your money the way that you want it to be treated? A lot of people believe it's not a good idea. So the other option is move it to a new place and move it into an IRA. Now, the benefits of moving into an IRA there's a lot of them. Number one, way more investment options, because most 401ks limit the amount of investments that you can do. Like, you can't do precious metals, you can't do real estate, you can't do a lot of investments out there in a 401k, a typical 401k. They just give you a number of mutual funds, and then you pick those, and that's it. You move it to an IRA, and let's say you love Tesla and you have $20,000, you could put, you know, a self-directed, you could buy all Tesla stock, and that could be in it. You ultimately decide what your options are. So I don't know, Steve, what your thoughts are on that. And, you know, we've kind of talked off here a little bit of, you know, investing and things like that, but it's kind of comes down to control and not control, is I think the big picture. of what the options are.
Well, that was the big thing. There was a U.S. News and World Report piece that came out. It highlighted, obviously the millions of people that are out of work, and they're now in a position where they do have to decide what to do with the funds in their 401k account from a previous employer. And, they probably don't know all the various options that they actually have out there. And that's obviously your specialty. That's where the magic of Noble Gold seems to happen, is you're very up on all the different options that they have.
Absolutely. Yeah. And I think, even another option is, let's say you already found a new job, you could roll that old 401k into the new job, which is probably a better idea than leaving it at the old place. Mm-hmm. Now, there's some things that I would say that, being in the business, I've helped people move IRAs for about 15 years. They don't make it easy, right? I'm going to just tell you that, and they're going to make it hard, because the custodian you're with has no incentive to let you move the money to anywhere else. So if we do it with you, and if you want to do it in gold and silver or cryptocurrency, we have a team that will help you, and we know the ins and outs of it. But even if you don't do anything with us, I would just tell you that a lot of time the strategy is just to kind of wear you down so that you don't do anything, because they don't want you to move that money. They want you to keep that money. And I would just say, if you're determined, and by law, it's your money, persevere. Just stay the course, continue to call them, continue to, and I've seen it happen for years, where they say they didn't get the right fax, or they didn't get the right email, or the signature was wrong. I mean, you'd be shocked of all the things that I've seen. The dog ate it. I mean, I'm not, and I know it sounds funny, but it's literally true. So
your strategies before they wear you out, you have to wear them out.
Exactly. And ultimately, the other thing, this is the biggest thing, is a lot of people but they don't. If a company puts money in a 401k for you, and let's say you never put a dime in, but the company contributes, like most big companies do nowadays, a lot of people feel like it's not their money. It's your money. I'm here to tell you, that money, whether you put that money in or you work for a corporation, that money is yours. And I can tell you this is a fact. There's 33,000 401ks that are left dormant every year in the United States.
Wow.
Because people just leave it. And I mean, it's a huge number of people that just leave those accounts. And you'd be surprised if you never you never open those statements. I mean, I've had people call me, and they, because we started to dive in, and they said, I had $28,000. I worked for an oil company. I never even put $1 in, but I had some kind of profit sharing, and I have this money, and wow, thanks for letting me know. That, I guarantee you 99% of the people out there right now that are watching this have some money that they didn't get. And I'll go even farther. There's a lot of studies about inheritance. Now, what ends up happening a lot of times, and there's a lot of reports about this, it's pretty interesting. So let's say someone passes, and there's a big chunk of money, right? There's like 100 or 200 or 500,000. Everybody kind of splits all that up and fights over it. They kill their brother and sister for it, unfortunately. But then there's like an account with like $2,000. Nobody wants to do anything with it. They don't even want to mess with it. There are millions of those accounts, millions and millions of those accounts that have never been moved, because I want to see the big account. I don't care about the little account. Well, you know what? The little account, there's some money in there that's yours, and there's some money you can get. So I think, people need to realize, and there's websites you can go to, and you can Google and find out if you have any money at an old account or old 401k. And especially in times like this is a time that if you have the time, do it. Get out there and see if you have it. And listen, a few $1,000s here, a few thousand there that maybe you never knew about. I mean, that could really help you get through this time. And,
absolutely. And just even think of just the compound interest that could keep.
Absolutely. Yeah, absolutely. And these companies sort of hope that you don't ever, go after that money. They hope that you just leave it there. And every custodian has, all this cash just sitting there that no one has moved and no one's wanted to deal with. And the numbers are, I've helped people, our staff has helped people. And sometimes, it doesn't, even if we just kind of get you in the right direction so you can call maybe you're not interested in precious metals or cryptos or whatever, but we've just helped people kind of lead them in the right direction, and they're shocked by how much money that is just kind of left there.
That's beautiful. Yeah, it's the proverbial finding your loose change in the couch.
It is, exactly. Yeah, that's exactly what it is. And I think that the hunt is kind of fun too. It's a fun hunt.
It's treasure hunting, isn't it?
It's
really, yeah. Targeted treasure hunting, yeah.
Yeah, and not to go segue too much, but did you read that story about the guy that buried the treasure in the mountains? Did you hear this story? I should have sent this to you, but there's a guy, he wrote a poem like 12 years ago, and he was a collector of diamonds and gold, but he was a lover of nature in the US. So he wrote this poem and he hid money in the mountains somewhere, and I can't remember exactly where he hid it, but he hid it in a treasure chest, and within this poem, it told you where the money is, where the treasure is. And they just found it, someone just found it like 2 weeks ago. It was about $1 million in treasure. Wow. And, he came out and admitted that someone finally had found this treasure. And, but the guy was saying like hundreds of thousands of people had gone to try to find this treasure out there and just, failed. And then someone eventually found it and notified the guy, and he released it to the public that the treasure was found. And so, there is treasure out there, and there's probably some money out there. Everyone listening, there's probably some money out there that they don't even know about. That's available to them
and it ends up being low hanging fruit.
Yeah. Oh, absolutely. Yeah. It's usually just paperwork. I mean, that's what it comes down to. And I think that's these are the times that it's really important. The other thing that I would do is I always tell people, now that, like, let's say you're going to move that 401k and you're going to move it into an IRA, write it, however much is in there, $10,000, 204, write it down, put the date. So when you move it into the new place, you can really kind of see what's happening and how it's growing. And I think what happens a lot of times with 401ks, if you're putting money in, the company's putting money in, you really sometimes don't even know if it's really growing. Maybe it's just, maybe it's flat. A lot of people don't always know how much it's grown. And I think today could be a good time to kind of take a step back and go, okay, this is what I have. Today is, June, whatever today is, 15th. And how much do I have in there? And then 6 months from now, how much has it grown or dropped? I think that's a big part of it, because a lot of these 401ks, the way they're set up is they don't let you really know how much you've contributed to the growth. It's sort of vague. And that's a big thing too, is that if you're putting money in and it's not growing, well, then maybe you have to switch your strategy.
Right. You have to pivot. Yeah. Here's one that's odd for me. You can help us with this. I think a lot of people heard about the Hertz rental car company filing for bankruptcy.
Yeah.
But MarketWatch is reporting that in doing so, their stock went up.
Yeah.
How does that work? Could you explain that anomaly, or is that normal?
Yeah. I mean, this is the big problem with how bankruptcy is set up and how the stock market is set up. I think basically the restructuring gave investors confidence that they're going to come out of this and be in a better place. And also there's just a lot of short-term market manipulation where people come in and so they're releasing bonds. I think, one of the things is they're going to resell some stock, but they've even said, and this just came out, they've even said that stock could be worthless.
Right.
So they're saying, hey, we're bankrupt. Stock went up. We're going to release more because why not? I mean, people are buying this stuff. Sure. We might as well sell more of this stock that's worthless. But we're going to let you know that now we're really going to tell you that this stock could be worthless down the road. Just as a disclaimer. This is my big problem with the stock market in general, is that a lot of times it's not value investing. It's not what Warren Buffett preaches. There's a lot of this market manipulation and just based on the news and based on what's happening and culture, and a lot of times stocks going up, like Hertz is a great example. And by the way, Hertz was going up before this, even though they had shown quarters and quarters of loss. Their stock was still in a pretty good place considering they were about to go bankrupt. And a lot of it is it's all these ships kind of moving up, and Hertz just kind of been around for a while. People keep holding on to that stock, and it just keeps moving up, even though there's no really fundamentals that should hold that stock up. And I think that's what gets people frustrated with investing overall, is that they want to invest in companies that actually have value, but a lot of times you see companies that don't have value go up in value, and it just boggles your mind. Like, how could it go up
Right.
if it's bankrupt?
Right. Right. Yeah, I guess the one silver lining there is I bet there are a lot of good used car deals you can get right now.
I'm sure
Well,
there's,
maintenance
yeah,
cars,
you can get a
mileage.
sweet deal on a car that, I think the whole car market in general is obviously really struggling because people are not driving or just thinking about, do they need to buy a new car or at least a new car?
And they've been locked down for so long, so it's clearly a buyer's market at this point.
Oh, absolutely. The only thing that keeps the car market going is cheap money. And
Yeah.
you said it at the beginning, is like the Fed, saying that they're going to keep interest rates low till 2022 or whatever it is. You might as well say 2000 to infinity in my mind. I really don't think they will ever raise interest rates. I think we're in this permanent cycle of low interest rates, and they may hint at going up a quarter point or a half a point, but in the grand scheme, if you look at inflation, those numbers are negligible at best.
Mm-hmm.
So I don't think, listen, we've been in low interest rates since 2001, right?
Yeah, yeah.
So we're coming up on almost 20 years of low interest rates here in this country, and it's not like our interest rates are based on anything based on what's happening in the country. We just have kept them artificially low so that people can go out and buy more stuff, and corporations can buy money cheap. And companies like Hertz, rebuying their own stock at a cheap price, because they can borrow money still and rebuy their own stock. Right. So this is a never ending cycle. Now, what we do, if you do want to get into gold and silver or cryptocurrency, we can help you move that 401k. We can get you the stuff. And the nice thing about it is we don't do any funds. If you buy Bitcoin for us, for instance, you're buying Bitcoin, you own it. We're just helping you get there. If you buy gold from us, you own the gold. We don't own anything that you buy from us. It's in your name, it's yours. So it's nice to know that you're not having to buy a fund of something, that you're buying something that you're in control of. And I think right now, when there's, all this volatility that we talked about, buying something that's a little bit easier to understand, I think, is giving people a lot of confidence. And I think that's why gold has done really well. And I think that's why it will continue to do really well.
Yeah. So let's finish up with that. What do you see, where does gold and crypto fit into just the whole structure of where we are right now with our economy?
Yeah, in terms of diversification, it's a really important asset to have to diversify your portfolio right now. During times of turmoil, during times of heavy inflation, which, obviously we can't print all this money and create all this debt without having a lot of inflation. So during these times, it's really important to have these cryptos, Bitcoin and Ethereum, the other things that we do, those, have become more stable, especially Bitcoin. Bitcoin's been around 11 years now. And it had that volatility, but now, and it will continue to be volatile because obviously it's a digital currency, but it's really become more of a staple for investors. And you've had funds like Fidelity create their own crypto fund, and a lot of big organizations that are continuing to focus on crypto. And you have a lot of billionaires. You have Paul Tudor Jones. He's a brilliant market predictor for the last 30 years. He was even saying that he likes Bitcoin right now. So, it's interesting to see the shift now that it's become more mainstream. It is a much riskier investment than gold and silver, absolutely. But I think it's become more of a staple. And I think when you see these billionaires who, as much as people say like they have nothing to lose in a way, but billionaires didn't get there by losing money. So they don't want to get into an investment that's going to lose. So I think if a lot of these billionaires recommending it, I think it gives it, a good idea that it's a pretty strong, it's a much stronger asset class than it was like 4 or 5 years ago.
Yeah, I read somewhere they're experts at being able to gauge the risk versus reward, and so they're not going to go with anything where the risk far outweighs the reward.
Absolutely, yeah, and at this point, I think it's become more stabilized. I think that's the thing that people are liking about it. So, and the cool thing with our system is that for the same price with the custodian, you can do gold or crypto or both or one or the other. So everything's the same. So if someone wanted to do both assets, they have the ability to do that. which I think people really like. And, you can, oscillate between the two investments. So yeah, we're definitely a place if someone wants to learn. I think the first step is getting educated on the two assets. We send you out the free information, you talk to us, and then, really just ask as many questions. We're very patient. I think that's what everybody says about our staff is that
you have a free investors guide that people can download.
Yeah, they have a free investors guide. They can call us, or I'm sure we'll have a link in this video. But yeah, get the free information, dive in first, and then call us and ask as many questions as you want. And we're here. We're a U.S. based company, and we want to talk to people. We're one of the few companies out there that actually want to talk to people on the phone. So we do talk to people. We're live. And we enjoy it. So hopefully this was a good kind of overall talk about what the options are. And I think for me, I always try to present all the options. I've always done this and just let people know that this is what we do, but these are the total options. And I think people are missing that right now is that a lot of times some asset classes, like the stock, they sort of make it seem like they're the only thing out there. And there's so many alternative investments to get into right now. I mean, you can even buy real estate within your IRA. I mean, there's a lot of options. So I just think knowing your options and then making the determination on your own is the best way to move forward.
That's excellent, Colin. Thank you so much for being here. And, during these uncertain times, it's wonderful to know that we have resources like yourself and your company at Noble Gold that we can go to. You're very, very appreciated. Thanks again, Colin.
Absolutely. Thanks, Dr. Turley. Appreciate it. Bye-bye.
You bet.